Diamonds are one of the most precious and valuable possessions. Diamond experts count on solid grading processes, which would aid in distinguishing rare diamonds from the average ones. It takes a lot of research and an eye for detail to grade the diamonds and separate the fine quality gems from the gravel. Any fumble in the grading process can significantly affect the ability to arrive at a fair price for the diamond. This careful selection process of diamonds through an in-depth framework helps in sorting, grading with consistency, and rejecting the gravel.
Be it sorting of diamonds, launching an innovative product in the market, or investing in profitable businesses, every endeavor has to have a robust and rigorous process which can help in setting realistic expectations and aiming for optimal outcomes. When it comes to investing, even a seasoned investor will find it challenging to individually handpick the quality stocks out of a vast number of listed companies spread across diverse sectors. This process would demand high level of persistency in research for spotting the right stocks and then holding them in the portfolios patiently.
Therefore, it's imperative to back the investment decisions with a strong process and research methodology, which could aid in avoiding businesses with poor economics and selecting businesses that have an ability to create value for shareholders. UTI Asset Management Company's dedicated research team is well qualified and equipped to track, monitor, and analyze a wide range of stocks across various sectors. The team's expertise and their meticulous analysis skills, combined with an extensive access to data and infrastructure, has helped us establish a solid and strategic investment process. Being the oldest fund house in India has helped us evolve our investment process with the collective experiences gathered over the years. Today, we have one of the most comprehensive, well-crafted and articulated equity investment processes in the mutual fund industry, branded as Score Alpha, a rigorous and a pragmatic approach to equity investing which drives and assists our research team in identifying superior businesses and investments.
As a part of research methodology, our research analysts aim to consistently weed out the poor businesses, considering their qualitative and quantitative parameters, and evaluate businesses on a consistency framework. This research-driven approach ensures appropriate selection of stocks aligned with the portfolio strategy. To do this, as part of our Score Alpha investment process, our research team actively tracks, monitors, and evaluates each company from a universe of over 360 stocks using our in-house two-factor stock rating model.
The two factors that drive our research process are operating cash flow and return on capital employed. A company with consistent positive cash flow generation signifies its discipline in business operations and thus can fuel its growth plans without relying much on external sources of funding. The companies with consistent positive operating cash flows are rated as C1. Companies with the least consistency in generating positive operating cash flow are rated as C3. And companies with average consistency, somewhere in between, are rated as C2.
The second evaluation parameter is return on capital employed. Return on capital employed consistently higher than cost of capital helps determine if companies have the potential to create wealth. Companies that have generated high ROCs are ranked as R1, companies with low ROCs are ranked as R3, and companies in the middle are rated as R2 in our tier system. While operating cash flow is a hygiene factor, high ROCs are an important factor to determine the sustainability of wealth creation.
As a result of this rating and evaluation process, the fund managers use classified tiers of stocks to construct their portfolios as per their investment style, and they stick to their style across the market periods. The aim is to ensure that each portfolio is truly aligned with its investment framework and strategy. For instance, the growth-based investment style, we include companies that can self-sustain their growth and have the ability to compound wealth, with the predominant focus being on R1 and C1 rated companies.
Under value style, we spot companies that could experience an improving trajectory, bought at reasonable valuations, with a primary focus on R3 and R2 companies. Lastly, a blend strategy constructs its portfolio with a mix of both growth and value stocks by investing across R1, R2 and R3 stocks.
Our well-crafted, time-tested methodology and investment processes are guarded by a robust and strong risk management framework, which aims to mitigate risks associated with an equity portfolio. We only invest in stocks which are approved based on our research methodology. Fund managers refrain from investing in poor quality businesses. The fund adheres to internal prudential norms which set limits on exposure at a single stock level and also at a sector level. The funds maintain consistency in tier allocation of their portfolios versus the benchmark.
What strengthens and keeps this risk management process intact is our thorough review strategy, wherein our risk management team publishes monthly risk reports to keep the investment team abreast. Further, our steering committee monitors the various investment strategies, and our investment committee reviews compliance with internal risk norms and regulatory limits.
As a result of our robust investment process and incessant efforts to deliver quality output, our equity schemes endeavor to meet investors' life stage goals over the years, and we wish to accompany them on the path of their wealth creation journey in the coming years as well.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.